Okay, I'm just turning my microphone on. We're coming up to 8 o'clock and I'll welcome people. The YouTube stream has started and is working, which is good. Good morning, everyone. Welcome to a Wednesday 1 hour breakfast session. Hope everybody's having a good trading week and the volatility certainly is around with a bang. Quickly, I'll do the disclaimers. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, quickly, let's just have a look at the markets before we do anything else. So, if we zoom right out and we see what's happened in Bookmap, and I've got the 5-minute charts open across in TradingView that cover the entire session, so you can see what we had. Looking at yesterday's range, we had a dip, quite a big dip lower, and we're now at the high, the overnight high, and it looks like we're deriving a little bit higher, but we've come into a rather large liquidity band, so it may provide a bit of resistance. But we also have a major economic release in this session at 8:15 a.m. Eastern. We've got the US ADP employment change, and with that in mind, I mean, you've got this large liquidity band in ES, and if we just scroll back and we've got the whole of the Asian session here, you can see that liquidity band was there since 1800 hours New York yesterday. So they basically put that one there as an advert, as a flag, before they smashed it down. So it's just interesting to note once again how it's not always going to happen. You cannot predict the future, but sometimes these resting liquidity levels placed hours in advance do come around and get tagged. I mean, there's also something else that I drew based on the profile analysis in ETH versus RTH that we were looking at last week. So if I just drag in, my Sierra will behave. If I just drag in yesterday's profile, that's the white profile there, which is RTH, and I marked that one on when I woke up this morning, because it's really the top end of value, and I was curious to see whether, after they broke down, whether we would get to there. Something that I was talking about the other day was that they love to test the entirety of value. They may go beyond, as they do, but they often come back and test both sides of that value. And it looks like that may be the case as we go into this news release at 8:15. By the way, I'll just get rid of that one. I may sound a little different tonight, so if it is a little bit echoey, please let me know. I do not have my headset on. I'm recovering from a cold, but I'm finally using a microphone I've had forever. It's on a microphone stand now, and I've been testing out the audio quality in Audacity, and it does sound absolutely fine. But if anybody has any questions or does not like it, or any comments rather, please feel free to say. And good morning to you. I've got you on very small, Alois. Good morning to you on YouTube as well. So we're coming right up to that 4275. But anyway, let us get onto the slides just so that we have them in place as some context before we get to sorry, I'll have to go all the way back. Apologies for that. I was not on the right slide. So the same kind of format. We're mixing it up partly because of the timing of the economic release. So we are really doing the prep and context for today ASAP, i.e. now, so we have some context before that release happens. Okay, and the two major pieces of economic news, 8:15 ADP non-farm employment and 10 a.m. ISM services. So those two. So expect quite a lot of volatility today. We've had a lot of volatility for the last little while. I posted in the Discord channel the ranges. I can drag that back in again. It entirely depends if my Sierra will behave itself. Sorry, now I'll just switch to the display capture so we can see it. This is updated from what I posted in Discord a couple of hours ago or an hour ago. So the average for the last 10 days is the right hand number. That for NQ that was 149 for ETH and for ES 35, and you can see that for today's ranges we are past that, and we still have a good hour and a half in ETH, so we may go well past that, especially if we keep exploring upwards. So in other words, it was a good ETH session if you like volatility, you like ranges, and you like to let your trades run. Okay, back to the slideshow. Okay, and we'll just I'm just going to move through some of these, and I'll come back to those later. But this is really about context for the economic release in a few minutes. So we've still got that multi-month uptrend there. It looks like it's now clearly been broken. If we look at yesterday's settlement, T+1, we're well under that trend line. And if we look at NQ, same scenario. And if you also look at the daily in NQ, you can see it's balancing here. So it'll be interesting to see what happens when we break out of this balance zone. Okay, on the 15-minute on ES, this is just ready to have a look at where we are in yesterday's range. We smashed down underneath yesterday's low in Asia, and then we went further still in Europe, and then after the German Open and into the London Open, we bounced very strongly. So we move on to NQ, same scenario. It's quite. If you're a price action trader, this is quite helpful. You've got a nice wide or long rather balance zone before it does break down. So when you see that, the probability is that it will continue. I mean, we can look at the profile, but we probably don't have an awful lot of time to do that now, but we will instead look at Bookmap, and you can see that it then did. So if you'd managed to get in either at the top part of this bounce or this bounce down here, there was a significant move down. But by the same token, if you've been looking for longs since the London Open in NQ, the London Open there is 3 a.m. Eastern, you can see it's been a good ramp up. This is the weekly stock heat map for all US companies on TradingView, and you can see that there's some green that's beginning to appear over the course of the week. Okay, let us get back to the display capture. I'm just checking to see if there are any comments, and not that I can see. So actually, if I just quickly show you one of the images that I did save here, which was, that's right, it is this. Okay, I think I've got two of these images. Yes, I do. And we can go back in time and have a look at them. Over the last couple of weeks, when we've been talking about supply and demand type trades, and I've really categorized them into two distinct halves, those testing a previous supply or demand zone, or those breaking one and then the breakout being rejected decisively. This trade really falls into the latter category. In Wyckoff terms, that's a spring. It's also known as a swing failure pattern, a breakout failure, etc. Category C on the original diagram that I did a few weeks ago. And what I said I think twice now in the last couple of weeks is this is one of the best examples, and this is an example of how Bookmap can or may provide a tremendous amount of extra value when you're trading that type of setup. So what we're talking about here is that you've got a good swing point, you've got a bounce zone, just breaks through it, and you've got a heavy liquidity barrier underneath. This is ES, obviously. if you look at the price column. Underneath we've got the market pulse, volume pressure imbalance. But the important thing to note is that we broke that. We broke it through some liquidity, and that we had a bank of liquidity below. And we also had yesterday's low, which I've marked in yellow here, as a key recovery point. So I'm just saying that, if you'd managed to get in a trade, that was the first target, and then it's been off to the races since. And the next slide is just this, exactly the same but zoomed in. Just zoomed in vertically and horizontally on the time axis, so you can see this trade. You've got a few things that can help you in terms of your trigger. If you're a price action trader, the fact that we've just had a 1 or 2 tick break of the previous swing low and then a rejection, that would be enough for price action traders. For bookmap type price action traders, you've got this MBO type stop into liquidity just below this swing point, and you've got this bank of liquidity. And also, I've marked over here on the right hand side the delta tail, something that I've been talking about. It applies more to NQ because NQ is such a thin beast, but here you have ES with a really nice tail. So by tail I just mean you've got sellers all the way down, and you've got this big fat sell up here as a target to aim at, which is also the HVN for this part of the chart. And the final point I noted here on this chart was that the volume traded at the absolute low, this is the breakout failure, was only 14 contracts. So that would constitute just about as a rollover. A really good rollover is single digits, but this is almost single digits, and nothing is perfect in the trading world. And the sooner we all realize that, and we just accept probabilities and accept where we're wrong and that we can't predict the future, the better off all of our trading becomes. So I just wanted to do that. Let's get back onto the chart. I'm aware that I am speaking quickly because I know the clock is ticking on this release in 3 minutes time now. I think we've got 3 minutes and 10 seconds. So let us zoom right in and have a quick look at this. This is something that we've talked about as well, which is when we approach, and we haven't quite approached yet, a resting liquidity level. On the first approach, this one didn't quite get there, it's about 2 or 3 ticks away. It often does not get there, it often turns around. Here we got to within 2 ticks, I think that is. We zoom right into this one. We got to within 2 ticks and then we turned around. And the turnaround's normally tradable. Sorry, I won't use the word normally, that is misleading, and I don't provide any financial advice, and neither does Bookmap. I mean that it may be tradable in the sense that, shall we get the pen going? Let's have a look. So you've got this structure here, right? The first thing you're going to note about that little swing high there is that it is a category C swing failure pattern, up thrust, you name it. It just goes at 1 tick above the previous 2 swing highs and then turns around. So it is the category C type supply and demand setup that we've been talking about. And you've also got this liquidity barrier there. So this is like a reverse of what we were looking at a couple of minutes ago. And I'm just aware of the time. So I'm just saying that one of the good things about this, and this is why I drew this, is that with that barrier being there, you can have a very, very tight stop. So if you get in, say, around about here, which would be about the 4274 level, maybe 4273.75, you've got a nice tight stop of about 1.5 points or 6 ticks, which is pretty darned amazing. And if you'd got in at 4273.75, it did get down to over 3 points. So you got 2R out of that if you had managed, if you'd managed it through luck or whatever, or through skillful trade management, whatever you want to call it. 2R was available on that trade. Let us get rid of that and let us focus on this for the news. So I'm going to turn on my Financial Juice feed. I know the folks on YouTube will be able to hear this. I haven't got the Discord plugin, so you don't get the audio from my computer when we have these news releases. I am friends with the guys at Financial Juice, so I don't believe they mind me having it on during this release. Okay, so we are down to 24 seconds. Yeah, I mean, maybe after we've seen the release and we've seen the price action. So yeah, what would not be surprising is we have a little push down and then we take that out. Alternatively, they may go straight up. Let us have a look. Yeah, you can see that some of this liquidity is being lightened into the release. You see how the orange becomes the yellow, becomes blue, and the red becomes the yellow. Here we go, straight
89K, 89K, lower than the forecast of 150K.
Okay, you may have heard that. If not, I'll just repeat it. The actual release was lower than forecast in terms of employment change. So bad news is good news. And you can see that bad news there resulted in us taking out the entire resting liquidity that was there. Just looking at my very short-term charts as well, and yeah, the candles on those 10 or 15 second bars are enormous. In fact, if we move this one down to 1 minute, yeah, you can see basically the same thing on TradingView. That was a good ramp up straight through the resting liquidity at the news release. One thing we could mark if we wanted to is that the scene of the crime really is around about here or here, around about there. So it'll be interesting to see if we do get some form of pullback back to that zone. Get rid of that. And let's just zoom right into the 30-second kind of time slice. So you've still got plenty of liquidity there. You've got another interesting piece of liquidity, resting liquidity, 218 at 4204. Whenever you got them at unusual numbers, and it may not be an unusual number in the sense that it doesn't have any correlation with anything else. It may well do. It may relate directly to an SPX options level or an SPY options level. So I'm just saying unusual in the sense that it's not a round number in ES. In other words, it's not at 4300 or 4250. Whenever it does that and the resting liquidity volume is relatively high, and you can look down this current orders book column and you can see that 218 is significantly higher than anything else that we've got on the screen. So that's what piques my interest. Then one of the things I'm going to do is start scrolling back and seeing if that was there all day, and it was. So that was there also for the entirety of the Asian session. So it was a marker that they placed, and being as cunning as they can be, and remember, they want to take price from high to low and from low to high in as efficient a manner as possible, and that means they need fuel. So that they would have got long right down at the lows, when we were way below yesterday's Globex low, and they may still be in this trade, or they may just have got a few points out of it, but they will do things that are not easy to see, and they'll often move them in other instruments, so you're not entirely sure of the hedging, confluence, correlation, etc. So I'm just zooming in vertically so we can see all the price levels. And we had that scene of the crime back down here under the resting liquidity, under that original resting liquidity at 4275. So anything back under 4275 would be like a quick check of it. Unless, of course, we use this liquidity as an entire barrier and go all the way down. I'm just reading the Discord comments. Bellion's got a comment. He started to track the 10-day session average range for Globex a little over a month since. Yeah, we're going to be different. Bellion, you're going to have a different data source. And here we are, by the way, we are just going back and doing that check of the scene of the crime. So that wasn't entirely unexpected. You had that bank of liquidity above, and the most likely place it was going to go to was this, which was the scene of the crime. Now you've got some supporting liquidity here, so it'll be interesting to see if it can crash through this or not. And just looking at the profile as well, you've got a semi-profile. I wouldn't say this is a very accurate profile from TradingView, but you've got, they might fill the gap all the way down to there as an example of what they might do in NASDAQ, and they have just done that in ES on this chart. So that's often something that profile traders look at. It's like a single, a very, very thin ledge, or you have a ledge at the top of a balancing profile and a breakout, and then if they're still hungry, they will often just continue on from this point once they fill that thin gap. But since this is an economic release, one thing that you may need to bear in mind is that the true auctioning may be interrupted, so that the normal price action auctioning that was taking place prior to the 8:15 release may be suspended while we have all this volatile action, and it may continue a little bit later. So far all they've done is come down to the scene of the crime. If we flick across to NQ, again the liquidity is just these algo bands. It has cleaned up a little bit in the last few days, but it's not very helpful, the resting liquidity in EDH. I mean, if I zoom all the way down, you've got that round number 14,800, which I tend to disregard regardless of whether we go through or not. When I see little levels like this, then I pay attention. So I'll look at that one down at 14,690 or 41. Why did I pay attention to that, apart from the fact that it is slightly brighter than some of the other levels around it? It's above 30. From what I've seen in ETH, and we're towards the end of this ETH session, whenever you've got a resting liquidity that has been there for some time, and this one has not, let me just point that out, it's only just come in, but over 30, and this one is a fair bit over 30, 40, it may have some information that that could become relevant later, or may become apparent later as to why they did it. So if we have a look at the ES action so far, it was just a pullback to the scene of the crime, and they're going back up towards this resting liquidity, which if we zoom out a bit, it's much clearer to see. So zooming out vertically, you can see that little band around the 79.50 at 80 level, and also the 84.85 level. You see those two. And this line in the sand, which is the scene of the crime. So it will be interesting to note. Again, as I said last week, when you do get a trend days have a lot of confluence with major economic release, or correlation rather, with major economic releases being in the pre-market, i.e. around about the 8:15, 8:30 a.m. Eastern. So quite often on those days, assuming it was a trend day, and who knows what it will be because we cannot predict the future, as I said the other day, they often form the extreme for the next few hours within the first 15 minutes of the release. And here within 5 minutes of the release, they've formed this value here at a low swing point at 4273. So that would be interesting to see whether that gets breached, and whether that theory for today potentially being a trend day may be thrown out the window or not. But at the moment, that is a level that I would mark. I may even do that in Sierra, so it will actually appear here. So if I just, it's about the 4273, so if I mark that, it should magically appear in this column, the CLN, the cloud notes. So for the programmers amongst you out there, it is really, really easy to program your own interface with this cloud notes column. So all I've simply done, and you may notice I did it in a second or so, was to highlight something inside Sierra, and I'm now just waiting for this to appear in in Bookmap, one of the things that Tom and I have requested is that this refresh of the Cloud Notes column happens every few seconds. At the moment, it can take up to a minute, and you can see that it did appear just about there. It took about 50 seconds, I'd say, and so that is a line in the sand. For me, should they be an initial drive up to this liquidity? And the fact that we're coming down strongly towards it makes me wonder whether this is going to hold this time. Okay, at 8:24, I'm just going to have a sip of tea, and I will read any more questions or comments that are around. Okay. Let's zoom right in and have a look at this action as we come into this level here. So we've got this at 4273. I'm not thinking it will hold this time. I'm also looking at the tail. I'm looking at the fact that it's a little bit of fat delta there, but we have a rollover in the sense that so far we've only got 5 traded at this little low or double low here. Yeah. So if we talk about microstructure, they formed a low here. So far they cannot get back to it. That's quite bullish. And that is the bullishness is doubled up by the arresting liquidity. It's still acting as a magnet, being in ETH above. Yep. So the fact that we did not get there, and I thought we might because it was a little double bottom, that's interesting to me. And if we now, if we zoom right in on this, you can see the profile as well on this. So, and it does get quite skinny down the bottom. So, so it is interesting. It's just I've noticed that they've been pushing down with the liquidity here, so they're acting as a book pressure wall. And I'm looking through my book pressure tool that I built in Sierra and seeing a bit of pressure being applied. So, I have a numerical tool which also draws something for me in Sierra that really reflects what you are seeing with the colors within these. Within the nearest levels, I forget exactly how many levels I calculated it off in Sierra, but basically it represents what you can see on the screen now, and it's are they adding or subtracting to the brightness of those colors, which is done by adding or subtracting to the order book values that are there. So if we zoom right in on this one, let's just have a look, see what they're hitting with. So at this level there, it was only 3. Previously, it was only 5. So they're not hitting it with tremendous force below, but that hasn't stopped me thinking that, that they might want to shake out some people just below here. Then they put in some liquidity at this scene of the crime as well. Right, I think we can just watch this again for 3 more minutes, and then I'll move on to some other topics. Yep, and it's taken it out so far by 1 tick. Are we going to fully explore the scene of the crime? Yeah, as I often mention, I normally have both of these side by side, the NQ and the ES, and I find it easier to read when I've got both of them together. So, if I'd seen some nice action like that in NQ, it may have given me a different interpretation of what I was seeing in ES. You can see here with the delta dots, there's quite active selling in NQ. You've got quite a large trade, 73 at the low, but bear in mind that is a delta dot. Now we're getting some extra volatility as we approach 8:30 in NQ. Go back to ES. Alright, so by flicking through, and again this is the problem of not having them both side by side, we missed something which was a beautiful little stop run. So you've got this scene of the crime around about here, you've got some people that may well have had stops there, and you've got a 400 MBO just below. So that will now be interesting to see whether that can hold and can give us the fuel to drive back up towards the resting liquidity. Yeah, I thought they were going down to something. I thought that it was going to be something close to this resting liquidity that they'd put in beforehand there. You can see that resting liquidity being there well before the news, now an hour and a half. But they've got this little plunge here, and you can see that it did not trade, or maybe it did. It's hard to tell with delta dot. That's why I don't tend to use them all the time, and we can just switch them so we can see whether they did trade there. So if we switch those to total volume, yeah, they did trade all the way down. That's interesting. Sometimes with those delta dots, you can't see all the prices at which there are bubbles, i.e. which they traded, and I've also got this minimal volume display as well. But for the purposes of this, I will stick with volume delta since it seems to be more popular with people. So you've got a nice tail now, a nice red tail in ES. You've got some liquidity above. You've got that bank of liquidity. They moved it down, now they're moving it back up, and we're driving back up towards it. And I'm seeing book pressure, begin to get positive in ES. So it looks like this swap run was really quite useful. Yeah, so if you were trading it, and you might have taken this here, the swing just before. So look at the time, 8:15. Yeah, just before 8:15, 8:14, 55, and said this little line there was essentially a swing point because of the news, and then this was a test right down to it and through it. So that was again another category C type supply demand, and then you had a stop run. How would you have got in? You have a couple of clear points where you may have put a stop, either just below the extreme of the new swing point, or just below this resting liquidity. The two places. Again, you cannot know what they're going to do. So in some senses, the stop does not matter as much as your acceptance of that stop. And that's one of the things that I'm telling myself as much as everybody who might be listening on this webinar. It is a probability game. It's a maths game, and we'll go into that when we go on to the education ideas section in a little while. Just because this is a major red news item, I just wanted to stay on this for a little bit longer. And it's also interesting watching the way that they've come back to this scene of the crime, and they keep coming back to it, which does suggest that they're going to get very close to this 4270. They've now taken some of that liquidity and moved it down. We're surmising because of the way that the colours changed there. Let's have a look to see how much was traded this time around. Even though those are delta dots, the volume numbers here and here are correct, and also the market pulse, which is here based on volume, the volume pressure imbalance, that is correctly based off volume. So it is regardless of the fact that you may have chosen to view delta type bubbles instead of volume type bubbles. If we had something more akin to a triple bottom, or even a quadruple bottom, i.e. if you had one level, maybe I should draw it again. So if you had something akin to that, which was 1, 2, 3, 4, 5 touches, and this is not, because some of these swing points are way off it, that would strongly suggest to me, on the basis of this, that they want to get down to that 4270. Unfortunately, that is not a quadruple bottom. I mean, the old saying, again, like everything in trading, it's a double-edged sword, but the more times you bash at the wall, or the bricks are going to give way eventually, and you're going to get through there. So let's just zoom in again. The other thing to note is that ES is not my favoured instrument in the ETH session. I do prefer the NQ, but around these very volatile news releases, ES is often a better instrument in terms of controlling the risk that you're taking. If we look at the NQ chart, for example, we're probably going to miss the action again. You really can see quite large ranges. Now we've had this big drive up, and they're going towards some liquidity above. Yep, so this whole region is now in play again. So you've got a triple 1, 2, 3 top, now a quadruple top. So you'd think, either on this touch or the next touch, they're going to break through this, at least for a price check above it, to see whether there's any interest in auctioning right through or up to the next major area of that resting liquidity above. Yeah, I think if you'd have had both ES and NQ open at the same time, it would have been easier to read this. To read this one as another category C type breakout failure, and then a move back up towards this resting liquidity. Yeah, and again, when you've got your own screens and you're in charge of your own screens and not looking at this one small screen that I've got here displayed next to the TradingView charts, that it would be something that I would suggest, and that's something that I do, which is I have them side by side. We can do that, but I've got something else I wanted to show a little bit later. Anyway, we're at 2035, so let's move on to some other ideas. So we've done some live order analysis. We've seen, price be bullish on that news release, even though it was bad news, and we've seen price check it. So we checked the scene of the crime effectively 1, 2, 3 times, and so far we are bouncing. So at the moment, that scene of the crime is holding. Right, let's move on. Okay. I think the slide that I wanted to show. Yeah. This one, okay. It's just another source of great information, okay. You're not going to find me in these webinars, these breakfast webinars, talking too much about economics, right? But occasionally I'm going to point you towards information, and all the information I tend to point you towards is going to be free. And this is one example. So Fred is part of the US federal government. Yeah, I'm sure loads of people who are here already know about it. But my point here is that this is a spread between the 2-year and 10-year yields. And even though it went inverted, that's in below zero, we have basically reversed hard since July. That's 2023-07. And yeah, we are steepening. So this yield curve is steepening. All right. Again, I'm not here to provide any economics lesson or not. It's just something that there are two things that are a takeaway in that, which is the NASDAQ does pay a strong amount of attention to certainly short-term money lending, i.e. the 2-year rate, maybe even shorter, right? And the market as a whole looks at these spreads an awful lot. So my take is that it is wise, regardless of whether you're an intraday scalper and you only trade from second to second, minute to minute, to do your homework and check these occasionally and see how these yields and these spreads are changing. And bear in mind that there are many professional traders, often with much deeper pockets than you or me in terms of our trading of ES and NQ, that do not trade the ES and NQ, that they will only trade these yield type instruments or spread type instruments. So if we ignore that from our analysis of what may happen in ETH, it's at our own peril. Okay, let me just move on. Done that. I think we've done the slides to death today. Okay. Right, okay, we've got ES back. I'm about to move on to the other ideas and education section, but I'm just having a look at this. If we zoom out of this and we get the heat map looking. So basically, we had a bullish move up, scene of crime check, and back to the resting liquidity, which remained a magnet. We had some more semi-resting liquidity in the fact that it was there for about an hour or so to drag us down towards that scene of the crime. And from there, they got some fuel, which you can see in this big fat tail, the red tail in ES, and that has helped them drive to the resting liquidity above. And in NQ, we've had good resting liquidity above at 14,800, and you've got some more up at even higher. You've got 56 up at 14,845. So one thing that we have to be aware. We've talked a little bit about statistical analysis and ranges being larger than the average over the last 10 trading days. We also have to remember that price can go much further than any statistical averages. So that if you get some resting liquidity here in NQ of 56 at 14.85, and if we drag this all the way back down to the you've got some resting liquidity way down there at 14.655. But feel free to explore where all that resting liquidity is. Price does not move in straight lines, and we should never be surprised if they chop, and let's have a look at Monday's action in RTH as a good reminder of that. So if we get Monday, and it's this crazy chop and then big plunge down. I think we had a crazy plunge up and a plunge down later. They will chop around so many times until they've got the fuel in all the right places for them to drive it as far as they want it to go. And they're often trading in all these other types of instruments, so that some of the things that we see in our charts, in our bookmap, we have to also be aware of what they are trying to do and the fact that they're going to make it as hard as possible. And the most important thing from that is that we accept our stops, because if we accept our stops, when the price was crazily choppy, then we still have adequate assets to use in our casino risk bank for when the action becomes much smoother. I'm talking here about the RTH action, but it can apply equally to ETH. Okay. Right. Yeah, it's been quite lovely bullish action all the way through. It also feels strange speaking without a headset. So if anybody missed the beginning of this is the first of these webinars I've done without a headset. And I'm standing up, so I'm wandering around a little bit, and there's quite a sense of freedom. That's something else that, if you do ever get a sit-stand desk and you have a couple of monitors and you have a couple of charts, it does, in my view, pay to get up and look at your charts or your monitors from different angles, and to get up and walk away as well, because you can often see something that was staring you in the face, but that you, through a tunnel vision, because you were so determined to massage the market into what you wanted it to do, that you don't see it. So, there's quite a great benefit in doing that. Anyway, something else that I wanted to talk about today, which really is about psychology. So, let me use the old whiteboard here. Where's the whiteboard? There we go. Right. And I may... I'll just do that. Right. Okay, I'm just going to put that out there and we'll go back to the charts in a second. And there are a couple of questions on YouTube. I'm going to qualify that in a second, obviously, but that's just out there. It's a controversial statement. Just one that I'm going to make. Let me get out of the... and I'll get rid of that as well. I'm going to clarify what I mean by that in a second, but I've just noted that there are a couple of comments in YouTube, and I'm just going to blow them up so I can read them. Paz was asking what I think about the upside in the European session. I think it's great. I think we cherish volatility, and if you look at where they actually turned it around and the time they turned it around, that was absolutely beautiful for the European traders. And your question, Paz, is right into the European session. You couldn't have had any better bullish action for you. I mean, like if we, where is that? TPO again. Yeah, where's the TPO again? Here it is, right. So we've got yesterday's RTH low. They broke it way down, and let's put these in their own blocks. and that time there was, it came down towards the London Open, and then it just zoomed higher. You look at the potential. I'll just reset that. You look at the potential. If you look at the Bookmap action, and I did show it in those images of the breakdown failure there. But you look at where that value was yesterday, and the fact, I said this at the very beginning of this webinar, that I marked this yellow zone right at the beginning of the Asian session there. And the reason I did that was the reason that I said on Friday. I like to look at the entirety of value from the RTH session. Sometimes I have to separate these out into time blocks to see when that value occurred. And here, if you look at this, this is the afternoon value. The afternoon value is always more pertinent in the following ETH session than the morning value from the RTH. So, if I've been saying that it's quite common for them to, traverse the value, explore beyond it to see if there is any more price auction activity down there, to come back and retag this T+1 level, because that is where there's an inventory imbalance. And the times that they tend to do that, there are several opens in the ETH. There's the Japan. Let's backtrack this. There's the New York 1800 Open, which I don't really call a proper open, but it is an open in the sense the market was closed for a little bit. But it's not a market that's open. The Japan one is. The China one is. There's an Asian lunchtime thing, which is where this first turned around. And then you've got the German Open and the London Open. So you've got quite a few opens. So the fact that they may have tested out the inventory imbalance at this T+1 settlement at one of those opens doesn't mean, or doesn't preclude them doing it again at another one. And the ones that I look at the most, maybe it's because of my time zone, or maybe it's because of what I've seen in terms of price action and real volatility of ranges. The two that I look at the most are the German Open and the London Open. So, you have this, went all the way down there. And, you've also got a lot of people, you've got some smart people out there. I'm not talking about me. I'm talking about much smarter people than me, putting out some interesting thoughts that, we were due for a really, really big squeeze. Whenever I read that kind of thing, it's not, it's not an incentive for me to go long straight away saying, oh my God, we're going to squeeze all these shorts from yesterday and go straight up, because that's not what tends to happen. They always go further than you expect, or not, I won't say always, but more often than not, they will go further than you expect. So, you might have expected them to go just beyond yesterday's value and just take this one out, but they went a long way further. There would have been people that would have been trying for a swing long just around here, and they might have been killed. There may have been some people that were lucky enough to get it around here, and they'd be, making their entire month's money if they were still holding right now. But yeah, that's what I thought. I think there's another question as well. Would I consider, this is the last comment, Trader J, JBR, sorry. Would you consider NQ a more liquid instrument than ES this morning, trying to learn or to read liquidity? No, it's never more liquid. I mean, I'll get rid of this. Whenever you're talking about liquidity, you're really talking about this column here. I can tell you that of the nearest 10 price levels in ES and NQ, and I have this as a statistic. It's very easy to calculate, live in whatever charting platform you've got. But I've got it as a statistic that the current liquidity level in ES is 60-ish, and the one for NQ is 7. So it's basically 9 times as liquid. The ES is 9 times as liquid. The NQ is never, I've never seen it more liquid than the ES. And with liquidity, we're just talking about the orders sitting in the book. We're not talking about the colors in the heat map. The colors in the heat map are just reflecting the visible range. What is, where are the most orders in this visible range. So those colors will change, as we zoom in and out. If we zoomed right in, you can see how you've got this yellow and orange band, but if you zoom right out, you've got a lovely orange price level here at 4276.50. But no, ES is much more liquid. It's a thicker instrument, much more heavily traded. a lot of professional traders in there, and they trade with size. And one of the reasons why they choose ES rather than NQ is because they can size up. Quite often in NQ, you'll get a stop run where it might be an 8-point stop or whatever, say 40 ticks. And a lot of those 40 tick range, there will not be trades at individual price levels. So in other words, they have to sweep through several price levels to fill all their contracts of that sweep stop. That is not the case with ES normally. So it's easier for big money to get in and out, and that is a big consideration for them when they choose the type of instrument that they have. Okay, so at the moment, it's still it's essentially got back to the scene of the crime, and it's grinding up towards this liquidity above. And in NQ, they're beginning to light up these levels at 40 and 45, but you've got this thick liquidity, you've got the algo bands, and then you've got some thick liquidity. It's hard to tell with NQ because of these algo bands have been terrible in the December contract, but you have a thick liquidity at the round number, and that's currently holding price with a double top. Okay, so what did I mean by my statement that there's an awful lot of money to be made in psychology? Right, I've spent money. I'm always happy to admit that I've spent money on trading education, and some of that is not very good education. It's telling you a lot of what you should or maybe should have been able to work out for yourself, right? One of the people, if we start talking about psychology, one of the people I think that's helped me the most in terms of understanding, what is trading and what is psychology, as in just psychology rather than pure trading psychology, is Tom Dante, and his tweets on Twitter are all free for people to see. And I think he sells the odd thing, which is again really, really cheap in terms of some of the webinars that he's done in his life. But I'm not trying to sell anything for him. What I'm trying to say is that he's done a lot of psychology. He's traded professionally for a very long time, and one of the conclusions that he drew about all of this was that psychology on its own does not give you any edge. And what instead gives you edge is a trading plan setting out a process for setups that have a positive expectancy. It's something that we've hammered home in this channel time and time again. And a positive expectancy is a statistical series of trades where your R value on the umpteenth trade at the end of your statistics is above zero. So in other words, the best way, or one of the best ways to achieve that, is by having the same dollar value risk every time that you lose, and giving yourself the opportunity to make more money than you lose on trades where you are a winner. So that even if you only had a win rate of just above 50%, you can do very handsomely and have a very positive expectancy, right? And one of the, this is something that I was going to draw and go through on this one. And this is just completely rough, and this is just a debating flowchart. It's not filled in or anything. It was really to contrast psychology from trading plans. And again, I'm reiterating one of the things that Tom has said, probably in tweets as much as anything else, that if you have a detailed trading plan that covers every single type of contingency that you encounter, it could be pages and pages and pages, and it does not need to be looked at every single day, but you've gone through the process of writing it. Sorry, there's a question there. What was the trader you like his psychology notes? Tom Dante, D-A-N-T-E. He's from London. He's English, so if you've heard him speak, he's got a London accent. If you've addressed all of those contingencies, so, this is an example of a starting flowchart. And again, I've done this in Obsidian because it's a free piece of software and I use it. I use it for my journaling, I use it for flowcharting. But, with this kind of flowchart, you can write with text and then it draws all the flow boxes for you. That's why I'm just saying that some of this kind of thing is really helpful. And then you can start, dragging the boxes around yourself afterwards and adding more boxes, etc. If you start drawing this and you write through all your contingencies of what may happen, and I did one here. I said, we're talking about these breakout failures, these springs, these up thrusts, these swing failure patterns, right? If you write down, and it doesn't have to be totally exhaustive, but it just has to be exhaustive in basically covering most of the things that you see, then you've got something to refer to that can keep you calm. Because psychology, I've read quite a few books on this topic, and I've done a few of these webinars. A lot of the trading psychology per se comes down to about two things, or I'd say three things. It comes down to being aware of yourself, so knowing yourself, knowing what your trigger points are. I'm not talking about your setup triggers, I'm talking about what sets you off. If somebody said something to you and that drives you mad, and then you act in some irrational manner, those kind of trigger points. The other two things I'd say were being able to know yourself, to control yourself. So this is slightly different, so that one of these relates directly to what people go on about meditation, mindfulness. This is basically how you can focus yourself. I think a really good analogy of this is Olympic shooters. They control their heartbeat, and they can slow it down to 40 beats a second so that they can take a shot between heartbeats, right? And that's knowing yourself and how you can control your mindfulness to an extent that you can stay on top of your decision making that is following all the contingencies that you've written out in a process, flowchart, visual strategy, whatever you want to call it, inside your trading plan. And the third thing, which again, all these three things are directly interlinked, is being present in the here and now. Are you thinking of something that happened an hour ago? I'm not talking about your chart patterns. You're not talking about something that's, if we look across here, I'm not talking about a swing low there. I'm talking about, are you thinking about something that happened in your life yesterday, an hour ago, 2 years ago, whenever? I'm talking about, are you here in the present moment? So if you take that with the previous example of, can you control yourself through your heartbeat, your breathing, whatever, so you are here in the present moment, that is going to immensely help you execute a trading plan where you've got detailed processes that cover different types of contingencies that you can follow. After you've gone through those three things, and you can get on top of those things, and then you can better execute a trading plan. And remember, that trading plan itself must have setups which do have edge, and the edge can be both the setups and the way that you actually have a process to execute them. We've been talking about those category C type supply and demands. They do have edge. I mean, I think I've shown you umpteen examples. I can show you examples where they fail as well, and that is the whole point as well, that they are going to fail and you are going to get stopped out. But if you put them together into a plan and a process, then you've got a chance of having something with an edge, and you put things together like you could get to see with Bookmap. You have elements all together that into your process that cover these things. And here you've got this flowchart. So you've got this spring up thrust, category C type supply and demand. You've got a swing point. It breaks past the swing point. And I've just written down one contingency here, so that you're aware of it when you write a setup like this for yourself. And it's that it bounces beyond that. So if we draw that, so you've got a swing point here, say it's a high, and we go up above it, right? And then we see this type of action. So it's basically in this little box up here, right? The probability is, it can go down, but the probability is it's going to go up. It's going to be a continuation. If it's bouncing, it's not rejecting that, so it's not falling within the truest definition of a breakout failure. So you cover that as one of your scenarios. There could be about 50 different scenarios here. There could be about 5. There could be 10. Who knows? It's your setup. I'm just talking about something that's relatively generic, but you have to make it your own. And that is what this is about. And in my view, it's more important than every psychology book out there. It is a plan. It's a business, and it's about executing your business according to the processes that you set up for your business. Because if you don't treat it as a business with processes that have to be followed strictly, and that's why a lot of these these very successful companies have SOPs. I'm not talking about bureaucracy, I'm talking about standard operating procedures that are actually useful. In a small 1 or 2 person enterprise like your trading business, you may trade on your own, you may trade with partners, etc. That statement of operating procedure is absolutely critical to you, executing your setups correctly and giving yourself half a chance in this crazy market. Right, that was my 2 cents on that topic. Maybe it's something I probably won't need to cover again. Let me just see if there are any more questions. There's another question on YouTube. Alois Center. I've not watched NQ for a while, but this algo band is horrible. Yes, I agree with you, and it's been there for 2 weeks. You cannot see the real levels because of this. In the past, I saw 3 bands just doing a rollover, but it seems they're always there. It has been there since the December NQ futures contract became the dominant futures contract. Who knows if we're going to have this until Christmas? I don't. We can't predict the future, but it is horrible. And the way you use Bookmap in NQ to see those resting levels has to take that into account. So you have to really go, you have to look a little bit harder to find them. You can still see those. There might well be like a resting liquidity of 60 that has been there since 6 o'clock yesterday evening New York time, but it's hidden a bit by that by the algo bands dominating the heat map. So you just have to put in a little bit more work to see them. But the same analyses still apply. It's just harder to see, and we've just got to hope that they will ditch those bands at some stage. And I think I pointed out that in crude futures they had those bands for a very, very, very long time. But we shall see. Anyway, it has come up to an hour. I hope that some of this was some of this information was useful, entertaining, or somewhere in between. And thank you very much for watching. Have a good trading session ahead, and I'll sign off.